All right, welcome back. This week, we're slicing through all the market chatter to zone in on three very specific stock setups. Now, these are medium to high risk plays, but they've got some serious potential. We're talking about the week of February 23rd, so let's get right into it.
Okay, first things first, and this is important, please remember, this whole breakdown is for educational purposes. It's not financial advice. Every single trade involves risk, so you've got to do your own research, all right? Let's go. So, to set the stage a little, the S&P 500 is hovering around 6,895. In other words, the report we're pulling from calls this a pretty challenging bear market. And that makes finding solid stocks that can actually go up that much more important. Which, leads us right to the big question, right? When the whole market is kind of trending down, where on earth do you find the real opportunities? Well, that's exactly what we're going to unpack today. So, how did we get here? Well, the report we're analyzing started by screening a list of 20 different stocks. They were looking for tickers with a ton of trading volume and really clean, readable charts. The whole point was to find a few names with stories so strong they just might be able to fight the overall market trend. And that whole process led us to our very first pick, Vicor Corp, ticker VICR. The entire idea behind this trade is simple, really. It's all about riding a huge wave of momentum that just kicked off after their earnings report.
And, just look at this quote. This wasn't just a beat. This was a demolition. They reported earnings per share of $1.01 when Wall Street was only expecting 38 cents. That's a 165% surprise. Wow. That's the kind of number that makes everyone, and I mean everyone, stop and pay attention.
So what's the actual trade plan look like? Okay, the report points to an entry zone somewhere between $155 and $162. The stop loss, your safety net, is at 140, which means you're risking about 10%. Now look at the other side. If this works out and hits that second target up at 195, you're looking at a potential 25% gain. That gives you a really solid risk to reward of almost 1 to 2.5. And that's exactly what you want to see. The possible reward is way bigger than the risk you're taking. All right, so let's look at the whole picture here, the good and the bad. The catalysts are obvious and they're powerful. You've got that monster earnings beat and the huge demand from AI data centers. But on the flip side, you have to look at the risks. The stock's not cheap, with a PE ratio around 75. It's already run up quite a bit, and there has been some selling from insiders. You've got to weigh both sides.
Okay, let's move on to our second name, Comfort Systems. The ticker is FIX. The report calls this one the AI infrastructure monster, and you're about to see exactly why.
Seriously, check this out. Look at that number, a $12 billion backlog. It nearly doubled. This isn't just some company with a good story. This is a company with years of guaranteed revenue already lined up. And it's all thanks to the nonstop demand for building out new AI data centers. Just incredible. Now let's break down the setup for FIX. Yeah, the first thing you see is that big share price. But look closer. The risk here is actually tighter than Vickr. The stop is only about 5.8% below the entry zone. And for the reward, we're aiming for a 15% gain at that second target. So you're actually getting an even better risk-reward ratio here, at 1 to 2.6. The story here is just pure massive growth. That $12 billion backlog proves this company is firing on all cylinders. It's a classic pick and shovel play, meaning they sell the essential tools needed for the AI gold rush. The risk, of course, is that this is not a secret anymore. The stock is pricey, a lot of people already own it, and any hint of a slowdown could send it tumbling. All right, time for our third and final pick, and listen up, because this one is a different beast entirely. We're talking about Bicara Therapeutics, ticker BCAX. And this is a pure, high-risk, high-reward play that's all about one specific upcoming event. The most important thing to get about a stock like this is that it plays by its own set of rules. Its future depends entirely on upcoming data from its clinical trials. That means the stock price can shoot up or crash down completely separate from whatever the S&P 500 is doing. It can decouple, as the report says. So the trade setup really reflects that risk. The entry is pegged around the $15 support area. You're risking a clean 10% with the stop loss at $13.50. But here's where it gets really interesting. The reward. That second target offers a potential 30% gain. That gives you a very, very compelling 1 to 3 risk-reward ratio. Okay, let's be crystal clear on this one. The whole reason to even look at it is that upcoming data and the fact that it can ignore the wider market. But the risks, well, they're huge. This company has no revenue. The data is what we call a binary event. It's a make or break moment. It's either a home run or a total strikeout, with not much in between. This is absolutely not a trade for the faint of heart.
Okay, so let's wrap this all up in the week's playbook. Here's a quick guide so you can see all three of these ideas right next to each other and really compare them.
When you lay them all out like this, you can really see the difference. VIC and FIX are your medium risk plays with great risk-reward profiles. And then you have BCX over on the end, which is clearly labeled medium to high risk, but it's dangling that super attractive 1 to 3 potential reward for taking on that risk.
Finally, let's glance at the calendar, because what happens outside these companies matters. The big one to watch this week is NVIDIA's earnings on the 25th. This is absolutely critical. If NVIDIA comes out with great numbers, it could lift the entire AI sector, which would be fantastic news for both VICR and FIX.
So that really leaves us with one last question for you to think about. We've got 3 totally different ideas here: a pure momentum play, a solid infrastructure story, and a high-stakes catalyst event. Which one of those actually fits your personal trading style and your comfort for risk?
Hey, if you found any value in this breakdown today, do me a favor, hit that like button and definitely subscribe so you don't miss our regular analysis. If you know another trader who'd find this useful, share it with them. And drop a comment below. Let us know what stock you want us to break down next.
And hey, don't let the conversation end here. We've got a really active trading community going on Twitter, Telegram, and Reddit. Come join the discussion. All the links you need are waiting for you down in the description. And to wrap it all up, just one last time, please remember that this report and our breakdown of it are for informational and educational purposes only. This is not financial advice. All trading carries a real risk of loss, and what happened in the past is never a guarantee of future results. Thanks for watching, and we'll see you next time.